Welcome, dear traders. It's a time for the court to say enough, Judge Linda Chan said. And this is about the Chinese real estate developer China Evergrande Group, which defaulted on its debt back in 2021. Now, a Hong Kong court has ordered the liquidation of the company with the largest debt in the world of about $300 billion. While China tries to deal with the developer crisis, Japan is celebrating a space victory that puts it among the top 5 countries to send a spacecraft to the moon. Nearly 9 days after the lunar module touched down on the moon, the Japan Aerospace Exploration Agency has re-established communication with it. There is no clear end date for the SLIM lunar mission, but it was previously stated that the lander was not designed to operate in lunar night conditions. The next lunar night begins on Thursday. Well, let's get back to Earth and take a look at the Monday's Asian session went. Asia-Pacific currencies opened the new trading week following Wall Street state sentiment last Friday. U.S. economic reports showed a moderate increase in prices in December. However, they remained below 3% for the third month in a row, confirming that the tightening cycle has already come to an end. All attention is now focused on the two-day meeting of the Federal Reserve. It's expected that the current monetary policy settings will be maintained. Markets will scrutinize Jerome Powell's comments for clues on the timing of the first rate cut. As the FEDWATCH tool shows, the possibility of a dovish move as early as March is now being considered by 48.6% of investors. As the market went into wait-and-see mode, the US dollar also began the new week consolidating and trading moderately higher in the 103.40 and 103.60 range. The US currency stabilized against its 6 major counterparts, partly due to robust US economic data. On the other hand, negative geopolitical developments are driving safe haven demand. Nonetheless, the greenback continued to retreat from last Tuesday's 6-week high of 103.80 in Asia today. Today, the US currency has already fallen to 103.40, and the benchmark 10-year US Treasury continues to trade in a narrow channel above 4%, supporting the greenback. Overall, the US dollar index is set for a 2% gain in January. Especially if the Fed does not signal an early rate cut, today, if the bullish momentum continues, the US dollar may try to reach the 103.60 resistance level and test the psychological 104 level. If the bearish momentum strengthens, the US currency will continue to fall toward the next technical support level of 102.60 and 102.00. The Japanese yen strengthened at the beginning of the new trading week, as you can see, compared to last Wednesday's high of 146.80. The dollar-yen pair is trading slightly lower today. At the beginning of Monday, its price was trading near the 148 mark, within the range of 147.70 and 148.30. The Japanese currency has not fallen to this low since June 2022. As the US dollar is consolidating today, the yen bulls are trying to cut losses, advancing the pair towards the support of 147 yen. The technical resistance area for the pair is in the 148.40 and 149.00 range. To determine further movements of the pair, we should take into account that its trajectory is still determined by the pressure of the strong US dollar. However, analysts believe that geopolitical turmoil may provide a temporary boost to the safe haven yen. In addition, the yen found some support in the hints of the head of the Bank of Japan last week. Kazuo Ueda's comments suggested a possible revision of ultra-soft monetary settings in the future. However, no specific timeline was driven. After decades of persistent deflation, one should not expect quick changes in the country's monetary policy. Therefore, the Bank of Japan kept its ultra-soft policy in January, and the dollar-yen pair is preparing to enter January with a 5% growth. Meanwhile, the weak yen helps Japanese businesses abroad to grow and to increase investment in the country's economy. Amid Japan's relative improvement, China's stock market has fallen to 5-year lows, and the country's government debt is already 300% of GDP. Beijing is now struggling with a crippling economy and the deteriorated real estate market. This Hong Kong court ruling in the Evergrande case is expected to have little impact on the company's domestic operations. On the contrary, it's only the beginning of a protracted liquidation process that further complicates the day-to-day operations of both the developer and the real estate sector as a whole. In addition, Beijing redirected financial resources to producers rather than households. That's the focus from the development of a domestic demand has shifted to other countries importing more of its goods. This has already triggered counter-dumping decisions on the part of China's trade partner. Last September, India stepped up trade barriers and halted projects by Chinese automakers. Growing alarm over China's industrial overcapacity, flooding the European Union with cheaper products is opening a new front in the past trade war with Beijing, which began with Washington's import duties in 2018. At the same time, the restriction imposed on China's trade market is in the Eurozone and the United States gives the antipoding countries a negative signal. Meanwhile, promises of economic support from Beijing slightly supported the growth of the Australian currency, which is considered a liquid proxy for the Chinese yuan. And today, in the Asian session, the Aussie was moderately rising within the daily range of 0.6570 and 0.6610. The resistance and support levels allocated at 0.6670 and 0.6570 respectively. The New Zealand dollar was also rising during the Asian session on a Monday. The Kiwi dollar pair jumped above 0.61, maintaining a bullish trend in the range of 0.6080 and 0.6120. The Kiwi can rise or fall in further trading. In this context, there is a potential scenario for the price to fluctuate between the support of 0.6060 and resistance of 0.6200. And that's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.